Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about USDJPY. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is essentially what the big players in the market are doing and how they're moving and shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts. Now, starting here from the monthly time frame, what we can see is that at the moment the market is testing a quite strong historical structured zone. In fact, what we know is that from here, all these previous rejections to the downside were created, meaning that this area was acting as a quite strong supply and resistance zone. Then the market broke above the level, and as we know in the market, previous resistance, once it is broken to the upside, becomes support. And the market retested here the level and respected it as support. Then the market broke back below the level, and that previous support was turned resistance here. Now the market is broken once again back above that zone. So again, this previous resistance is now turned support, and this market is currently testing it as support, from which there is a good probability to see a potential rejection to the upside and for the market to respect this area as support. We can also notice that from a pattern standpoint, there is now a very clear impulse to the upside followed by this correction. Now, in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse zone, of the impulse leg. And what we can notice is that the zone that the market is currently testing is precisely the 0.786 Fibonacci retracement, which is also lining up with this previous level of historical resistance, now turned support. This means that actually we have confluence of support at this zone. And instead of a confluence of support, there is an increased probability of seeing institutional longing. And that is something that we will be speaking about in just a few moments when we move to the commitment of traders analysis. For now, let's drop that on the weekly time frame and see what we have. Now, from a weekly standpoint, the situation is quite clear. We can notice how in creating this move to the downside, the market has also created this big M pattern here on the weekly. And after the creation of an M pattern, there is an increased probability of seeing a potential rejection to the upside away from the zone. And we can see, for example, how right here, when the market had created this previous M pattern, after that, the market created a massive move to the upside. Now, let's keep all of this in mind and drop down on the daily time frame. Now, from a daily perspective, this is where things get very interesting because it is clear here in the daily how the market definitely seems overextended to the downside. In fact, no market can just go down on a straight line. Every downtrend will need a series of impulses and corrections. Now, the last move was an impulse to the downside. So the next logical step would be for the market to create a correction to the upside, for a retracement at least to the 0.382 of the Fibonacci taken on this impulse leg. So there is definitely the possibility to see institutional buying of USDJPY inside of this area, potentially pushing the price higher. Now, speaking about institutional buying, let's go and see what we have when it comes to the commitment of traders analysis, so what the big players in the market are doing. Now, if we look at what is going on here, when it comes to the COT data, we can notice how with the net positions, the last reports have been increased. We went from minus 900 to 18,000 net positions, showing how institutions are moving back to the bullish side for the JPY, adding 7,800 longs and closing 11,800 shorts. However, it is important to keep in mind that all currencies on the spot are traded against the USD. So actually institutions are longing the JPY, so they are shorting USDJPY in the short term. So it is no surprise that as institutions are shorting USDJPY, the price has been dropping aggressively. This is to be expected. However, what we can also notice is that in the long term, this has been going on for quite some time. We went from minus 64K to plus 18K net position. So it is clear that institutions are currently aggressively moving to the bullish side for the JPY, which means that even though there's a good probability to see a correction to the upside, this could easily be just a short-term correction to the upside for the natural development of a downtrend. Because remember that after every impulse, the market needs a correction in order for new sellers to come into the market. So in a situation like this, what would I expect? Well, now, first of all, if you still haven't, make sure that you join my free Telegram channel, which you find linked in the description, so you never miss new updates. But as I was saying, back to the analysis, in a situation like this, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if the market would shift from an intraday bearish to a bullish market at that point, I wouldn't be surprised to see a potential rejection to the upside away from this area for the market to retrace at least to the 0.32 of the Fibonacci taken on this daily impulse leg before. Then, yes, definitely more institutional buyers could step into this market and push it lower, but at least a short-term correction gives the possibility for new sellers to step into the market. So a push to the upside definitely wouldn't surprise me. Now, all this general free education and analysis that you see me provide on YouTube is actually just the tip of the iceberg. In fact, if you want to learn more, I really suggest that you go and check out my transparentfxtrading.com website, which you find linked in description. Here, you have the possibility to gain access to all my courses, starting from the very basics of charting all the way up to the more advanced topics like how to build automated trading strategies using the MQL4 language, how to build portfolios of strategies, and using quantitative finance tools like the Quant Analyzer to actually build those portfolios of strategies. You also have the possibility to gain access to my trading station software with the Telegram notifications integrations. You can get one-on-one mentorship directly with me. Also, you can gain access to the COT data software, which you often see me use on my YouTube channel. This is an all-in-one program. In fact, on top of all of this, you also have the possibility to gain access to all my personally developed EAs, so my automated trading tools. Here, you will see all the presentations of each and every one of them. And also you have the possibility to gain access to the trading show, so essentially a live stream of all the trades happening in live time from my live account. And if you continue to scroll down past the testimonials, you will see that you can also find the button to join now, and you will essentially be put in contact of my WhatsApp number. So I really suggest that you go and check it out as soon as possible. The link is in the description, and I will see you in my next video. If you enjoyed the video, make sure to drop a like, and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.